Hi, everyone, and welcome back to another episode of our English Learning podcast. I'm Jennifer, and as always, I'm joined by my fantastic co-host, Elizabeth. How are you doing today, Elizabeth?
Hi, Jennifer. I'm doing great, thanks for asking. Today's topic is one that affects millions of people around the world, especially young adults just starting their careers. Are student loans exploitative? With the rising cost of education and the staggering amount of debt many graduates face, student loans have become a hotly debated issue. Some argue that they provide essential access to education, while others believe the system takes advantage of students and traps them in debt for years. Today, we're going to break down the pros and cons of student loans and ask the question, are they truly exploitative?
That's right, Elizabeth. For many students, loans are the only way they can afford higher education, but with interest rates, long repayment terms, and the possibility of financial strain, student loans often feel more like a burden than a help. In today's episode, we'll look at both sides of the argument, explore how student loans work, and discuss whether they are a necessary evil or a system that needs reform.
Exactly. And for our listeners out there, we'd love to hear your thoughts on this topic. Have you or someone you know been affected by student loans? Do you think the system is fair, or do you believe it's exploitative? Share your opinions with us, and we might even feature them in a future episode. So, Jennifer, let's start by discussing how student loans work. What are the basics that people need to understand about student loans?
Well, Elizabeth, student loans are a form of financial aid that allows students to borrow money to pay for their education. Unlike grants or scholarships, which don't need to be repaid, loans must be repaid with interest. There are two main types of student loans, federal loans and private loans. Federal loans are offered by the government and usually have lower interest rates and more flexible repayment options. Private loans, on the other hand, are offered by banks, credit unions, or other financial institutions, and they often come with higher interest rates and fewer borrower protections.
That's such an important point, Jennifer. Many students rely on federal loans because they tend to offer more favorable terms, such as income-driven repayment plans, forgiveness programs, and fixed interest rates. Private loans, while they may offer larger sums, can be riskier because they often have variable interest rates, which means the amount you owe can increase over time. For students, it's crucial to understand the differences between these two types of loans before borrowing.
Exactly. And for many students, loans are necessary because the cost of higher education has skyrocketed in recent decades. According to the College Board, the average cost of tuition and fees for the 2022 to 2023 academic year was around $10,000 for in-state students at public universities and over $38,000 for private universities. When you add in the cost of living, textbooks, and other expenses, the total cost of attending college can be overwhelming for many families.
Yes, Jennifer. And because college has become so expensive, many students feel like they have no choice but to take out loans in order to pursue a degree. But once they graduate, they're often faced with a significant amount of debt, which can take years or even decades to pay off. This is where the argument that student loans are exploitative comes into play.
Absolutely, Elizabeth. One of the main criticisms of student loans is that they place a heavy financial burden on young adults just starting out in their careers. Many graduates find themselves saddled with tens of thousands of dollars in debt, which can take a long time to repay, especially if they're not earning a high salary right out of college. For some, it feels like they're stuck in a debt trap where they're making payments for years, but the balance barely goes down due to high interest rates.
That's such an important point, Jennifer. Concept of compound interest can make student loans particularly difficult to manage. If a borrower isn't able to make large payments early on, the interest can accumulate, making it hard to reduce the principal balance. This can lead to a situation where borrowers feel like they're paying and paying, but their debt never seems to go away.
Exactly. And beyond the financial burden, there's also the argument that the student loan industry takes advantage of young people who may not fully understand the long-term implications of borrowing such large sums of money. Many 18-year-olds are signing up for tens of thousands of dollars in loans without fully grasping how much they'll owe after graduation or how long it will take to pay it off. Critics argue that this lack of financial literacy makes students vulnerable to exploitation.
Yes, Jennifer. There's definitely a concern that students are being encouraged to borrow more than they can realistically repay, especially when they're not given enough guidance on what their future income might look like based on their chosen career path. For example, students pursuing degrees in fields that don't pay high salaries may end up with the same amount of debt as those in higher-paying fields, but they'll have a much harder time repaying it.
Exactly, Elizabeth. And this leads to the argument that student loans can have long-term consequences on a person's financial well-being. Many graduates struggle to pay off their loans while also saving for retirement, buying a home, or even starting a family. The debt can limit their financial freedom and delay important life milestones. Some borrowers even face default if they're unable to make their payments, which can severely damage their credit and make it harder to access other forms of credit in the future.
Absolutely. The long-term impact of student loan debt can't be underestimated. Can affect a person's ability to build wealth, and for some, it may even limit their career choices. Some graduates may feel pressured to take higher-paying jobs they're not passionate about just to pay off their loans, rather than pursuing a career that aligns with their interests and values.
Exactly. So, from the perspective of those who believe student loans are exploitative, the main concerns are the high financial burden, the lack of financial literacy among young borrowers, and the long-term consequences of being saddled with debt. But, of course, not everyone agrees with this view. Let's now talk about the arguments in favor of student loans and why some people believe they're a necessary and valuable tool for accessing higher education.
Yes, Jennifer. One of the main arguments in favor of student loans is that they provide access to education for people who might not otherwise be able to afford it. Without student loans, many students from low-income or middle-class families would be unable to attend college, especially as the cost of higher education continues to rise. Loans give students the opportunity to invest in their future by earning a degree that can lead to better job opportunities and higher earning potential.
That's such an important point, Elizabeth. For many people, taking out student loans is a way to invest in their education, which can pay off in the long run. Research shows that, on average, college graduates earn significantly more over their lifetime than those with only a high school diploma. According to the U.S. Bureau of Labor Statistics, the median weekly earnings for workers with a bachelor's degree are about 67% higher than those with just a high school diploma. For many, this earning potential makes the debt worth it.
Exactly, Jennifer. And while the debt can feel overwhelming, many borrowers eventually pay off their loans and go on to build successful careers. In this sense, student loans can be seen as a tool that allows people to gain access to opportunities that they wouldn't otherwise have. By enabling students to attend college, loans open doors to higher-paying jobs, career advancement, and personal growth.
Absolutely. And another argument in favor of student loans is that there are repayment options available to help borrowers manage their debt. For federal loans, there are income-driven repayment plans that allow borrowers to pay a percentage of their income, making the payments more affordable based on their earnings. There are also loan forgiveness programs for certain professions, such as teachers or public servants, which can help reduce the overall burden of the debt.
Yes, Jennifer. These programs provide some flexibility for borrowers who might struggle to make large payments right out of college. And for some people, student loans are a manageable part of their financial plan, especially if they've chosen a career path that offers good earning potential. In these cases, the debt is seen as an investment in the future, with the understanding that it will eventually pay off.
Exactly. And while student loans do come with interest, it's important to remember that federal loans typically offer lower interest rates than many other forms of debt, such as credit cards or personal loans. For borrowers who qualify for federal loans, this can make the debt more manageable over time, especially with the availability of fixed interest rates and protections like deferment or forbearance.
That's such a great point, Jennifer. So, from the perspective of those who believe student loans are necessary, the main arguments are that they provide access to education, offer long-term benefits in terms of higher earning potential, and come with repayment options that can help borrowers manage their debt. But, of course, whether or not student loans are exploitative often depends on the individual borrower's experience. Let's now talk about how the system could be improved to better serve students.
That's a great question, Elizabeth. One of the main suggestions for improving the student loan system is to provide more financial literacy education for students before they take out loans. Many borrowers don't fully understand how loans work, how much they'll owe after graduation, or what their repayment options will be. By offering financial education in high schools or as part of the college admissions process, we can help students make more informed decisions about borrowing.
Yes, Jennifer. Transparency is key. Students need to have a clear understanding of the cost of borrowing, including how interest works and what their future monthly payments will look like. This could help prevent students from borrowing more than they can realistically repay based on their career goals and earning potential.
Absolutely. Another suggestion is to reform the interest rates on student loans, especially for federal loans. Some advocates argue that the government should offer zero-interest loans or significantly lower interest rates to help reduce the long-term burden on borrowers. This would make it easier for students to repay their loans without being overwhelmed by interest charges that cause their debt to grow over time.
That's such an important point, Jennifer. High interest rates can make it incredibly difficult for borrowers to pay off their debt, especially if they're not earning a high salary. Lowering interest rates or eliminating interest altogether could make a huge difference in helping graduates become debt-free faster.
Exactly.
And another potential solution is to expand loan forgiveness programs to reach more borrowers. While there are already programs in place for certain professions, some advocates argue that forgiveness should be extended to all borrowers after a certain period of time, regardless of their profession. This could help alleviate the debt burden for people who have been making payments for years, but still owe large amounts due to interest.
Yes, Jennifer. Forgiveness programs could be a game changer for borrowers who feel trapped in their debt, especially those who have been making steady payments but still owe a significant balance. Expanding forgiveness options could help more people achieve financial freedom and reduce the long-term impact of student loans on their lives.
Absolutely. So, while there are many valid concerns about the exploitative nature of student loans, there are also ways to reform the system to make it more fair and manageable for borrowers. And speaking of different perspectives, I think it's a great time to hear from one of our listeners. Let's take a call from someone who might have an interesting perspective on whether student loans are exploitative. Hi there, you're on the air with Jennifer and Elizabeth. What's your name, and where are you calling from?
Hi, Jennifer. Hi, Elizabeth. My name is Sarah, and I'm calling from Atlanta, Georgia. I've been listening to your podcast for a while now, and I love today's topic. I wanted to share my experience because I graduated with student loan debt and have mixed feelings about whether the system is exploitative.
Hi, Sarah. Thank you for calling in. We'd love to hear about your experience. Do you feel like student loans have been a burden, or do you think they've been a necessary part of your education?
Well, I definitely think student loans were necessary for me because there's no way I could have afforded college without them. But at the same time, the amount of debt I graduated with has been overwhelming. Even though I'm working and making payments, it feels like I'll never be able to pay it all off. The interest just keeps adding up, and it's frustrating. So, I think the system is necessary, but it definitely needs to be reformed.
That's such an important perspective, Sarah. It sounds like you've experienced both the benefits and the drawbacks of student loans. Do you think there's a way to improve the system to make it more fair for borrowers?
I do. I think lowering interest rates or offering more loan forgiveness would really help. And I also think there needs to be more financial education for students before they take out loans. I didn't fully understand what I was getting into when I signed up for all that debt, and I think more information would have made a big difference.
That's such valuable insight, Sarah. Thank you so much for sharing your experience with us.
Thanks for having me. I love listening to your podcast, and I'm excited to hear more episodes.
Thanks so much for calling in, Sarah. Take care.
Bye, Sarah.
That was a great call from Sarah. She really highlighted the complexity of the student loan issue. Loans can provide access to education, but they can also create a financial burden that's difficult to escape.
Absolutely, Jennifer. And for those of you listening, if you're enjoying our podcast, please like and subscribe to our channel. Your support really helps us keep creating these episodes and sharing more interesting topics with you.
So, where does that leave us in our discussion today? I think it's clear that student loans are both a necessary tool for many students and a source of financial stress for many graduates. While loans can open doors to higher education and career opportunities, they can also create a long-term financial burden that feels overwhelming. The key is finding ways to reform the system to make it more fair and manageable for borrowers.
Exactly, Jennifer. The student loan system has its benefits, but it also has serious flaws that need to be addressed. Whether it's through lowering interest rates, expanding forgiveness programs, or providing more financial education, there are steps we can take to ensure that student loans are a tool for success, not a lifetime of debt.
We hope today's discussion has given you some new insights into the question of whether student loans are exploitative. Thank you so much for joining us today.
Yes, thank you for listening. We're always here to share new insights and help you learn English while exploring important topics like this one. Keep listening, keep learning, and we'll see you in the next episode.
Bye for now, everyone. And remember, education is an investment, but it shouldn't come at the cost of your financial freedom.